Good morning, afternoon, everyone. Welcome to our comprehensive analysis of the AUD/USD currency pair for the period of September 8th to 13th, 2025. In this presentation, we will delve into the key performance metrics, market drivers, and technical analysis that shape the pair's exceptional performance during this period. We will also provide detailed trading recommendations and risk management strategies to help you navigate the current market environment. Let's begin. Let's start with a high-level overview of the market. As you can see from the key metrics, the AUD/USD pair had a very strong week, gaining 1.56% to close at 0.6656. The pair reached a weekly high of 0.6669 on September 12th, demonstrating significant bullish momentum. This performance was driven by a confluence of factors, including strong expectations of a Federal Reserve rate cut, a risk on sentiment in global markets, and positive economic data from Australia. As the chart on the right shows, the Australian dollar was the leading performer among major currencies, significantly outperforming the US dollar, euro, and Japanese yen. Now, let's take a closer look at the price action and technical analysis. The chart on the right shows the AUD/USD's daily price movement during the week. We can see a clear bullish trend, with the price breaking through several resistance levels. The key technical levels to watch are the resistance at 0.6669 and 0.6700, and the support levels at 0.6632, 0.6600, and 0.6580. Currently, the price is consolidating near the weekly high, suggesting that the market is pausing before its next move. Technical indicators are currently neutral with a bullish bias, which suggests that the upward momentum could continue. The RSI is not yet in overbought territory, leaving room for further gains. Next, let's examine the fundamental drivers behind the AUD/USD's recent strength. The most significant factor has been the market's expectation of a Federal Reserve rate cut. As the chart on the right shows, the probability of a rate cut in September is currently at 100%. This dovish sentiment from the Fed has weakened the US dollar, while the Australian dollar has been supported by a hawkish Reserve Bank of Australia and strong domestic economic data, including a GDP growth of 0.6%. Other key drivers include the strong risk on sentiment in global markets and weak US labor data, which have further supported the AUD/USD pair. Looking ahead, the Federal Reserve's policy meeting on September 17th will be a critical event to watch. This slide provides a clear visualization of the Australian dollar's outperformance during the week. As you can see from the rankings on the left, the AUD was the top performing major currency, with a gain of 1.56%. The radar chart on the right provides a comparative analysis of the AUD USD and JPY based on key performance indicators. The AUD shows strong momentum, trend strength, and risk sentiment, while the JPY is clearly the weakest performer. This outperformance highlights the strength of the fundamental and technical factors supporting the Australian dollar in the current market environment. Now let's turn to our short-term trading outlook for the next 1 to 2 weeks. Based on our analysis, we have identified two potential trading scenarios. Our primary scenario is a long strategy, with an entry point on a confirmed breakout above the 0.6669 resistance level. The target for this trade would be in the 0.6700 to 0.6720 range, with a stop loss at 0.6630. Alternatively, if the price is rejected from the 0.6669 resistance, a short strategy could be considered, with a target in the 0.6600 to 0.6580 range. However, given the strong bullish momentum, the long strategy is our preferred approach. It is crucial to monitor the upcoming Federal Reserve policy meeting on September 17th, as it could significantly impact the market's direction. Looking at the medium-term outlook for the next 1 to 3 months, we see a 70% probability of a continued bullish trend. Our target range for this scenario is between 0.6800 and 0.7000. This outlook is based on the expectation of continued Fed rate cuts, a hawkish RBA, and a persistent risk on sentiment. The recommended strategy for this scenario is to buy on dips, particularly in the 0.6600 to 0.6630 support zone. However, there is a 30% probability of a bearish scenario, which could see the price fall to the 0.6500 to 0.6400 range. This would likely be triggered by a hawkish surprise from the Fed or a deterioration in global risk sentiment. Finally, let's discuss risk management and our specific trading recommendations. It is essential to limit risk to 1 to 2% of your trading capital per position and to use stop losses to protect your capital. For long positions, we recommend placing stops below the key support levels of 0.6600 and 0.6580. Our primary recommendation is to look for opportunities to go long on the AUD/USD pair, either on a breakout above 0.6669 or on pullbacks to the 0.6630 to 0.6600 support zone. The take profit targets for this trade are 0.6720 and 0.6800. For the bearish scenario, a sell on rejection from 0.6669 could be considered, with take profit targets at 0.6600 and 0.6550. However, this is a lower probability trade. Thank you for your attention. I am now happy to answer any questions you may have.